Hello everyone. In today's class, we deal about Financial Accounting 3, Program Commerce, Semester 3, University, Mangalore, Session 69. Recap of previous class. Need for sale and formation of a new company. Calculation of purchase consideration. Concept of piecemeal distribution. Learning objectives to make the students analyze the concept of purchase consideration and its calculation to prepare the students for accounting during dissolution and sale of partnership firm. Learning outcomes. Students are able to analyze the concept related to dissolution of partnership firm. The students are able to prepare accounts on sale of firm. So in this slide, that is session 69, we mainly highlight on the problem side on the sale of partnership firm. Generally, this problem deals with journal entries, ledger accounts of sale of partnership firm. The students can just refer the study materials given or enclosed with this video to have a glance on the problem. Generally, in the examination, the students can expect either only journal entries or ledger accounts. But for the convenience of the students in this problem, we have dealt with both aspect, journal entries and ledger accounts. The problem, what mentioned in the study material, if you refer, you can get the following information. I read out the problem. Messrs. XY are partners sharing profit in the ratio of their capital. Their balance sheet as on 31st 3 2020 is as follows. Liabilities, creditors 55,000, reserve fund 7,000, capitals X 75,000, Y 50,000, total 1,25,000. Assets, cash 4,500, debtors 40,000, stock 37,000, plant 85,000, investments 20,500. The total of the balance sheet is 1,87,000. Additional information. The firm was sold to a limited company on the following terms. Point number 1. The company was to purchase the whole concern except cash and investments at less 10% than book value. Point number 2, the creditors were taken over at their book figure. Point number 3, the company agreed to pay rupees 5,000 for goodwill. Point number 4, the purchase price was paid half in cash and half in fully paid shares of the company. The firm realized its own investments and the shares at 5% less. Give journal entries and prepare ledger accounts. So that is a problem as given in the study material. So if you go for the solution, the first thing we have to go for calculation of purchase consideration. Then we have to prepare journal entries and the required ledger accounts. As we mentioned in the previous session, the 5 important accounts we have to prepare in the realization process. One is realization account, purchasing company's account, shares in purchasing company's account, and partners capital account, and finally the cash or bank account. If we go for the solution side, first we can calculate the purchase consideration. So as mentioned in the problem, the assets are taken over by the company, that is new company, except investments in cash for 10% less. That means 10% depreciation has to be reduced. So therefore, the assets taken over, debtors 40,000 minus 4,000, 36,000, stock 37,000 minus 3,700, 33,300, plant 85,000 minus 8,500, 76,500. Total assets taken over value is 1,45,800, and the firm has agreed to pay goodwill 5,000. If you add 5,000, so the agreed value of assets taken over is 1,50,800. From this, we have to reduce the liabilities. The liabilities taken over only the creditors at book value 55,000. From 1,50,800, if you deduct 55,000, the purchase consideration is 95,800. So the purchase consideration payable by a new company to the firm is 95,800. In the second stage, we can prepare the discharge of purchase consideration. So in the problem, it is stated half of the purchase consideration is paid in cash, balance half in shares. So as the purchase consideration is 95,800, the new company paid half cash, that is 50%, which amounts to 47,900, and the balance 50% in shares, 47,900. So the total amount is here 95,800 rupees payable by the purchasing company to the firm. So we have calculated both purchase consideration and discharge of the purchase consideration. In the next stage, in the problem, it is asked journal entries. So journal entries, what we have to do is normally we have to transfer all the assets and liabilities to the realization account, and then we have to give the entry for receiving the purchase consideration and settlement of purchase consideration and realization of investments which is not taken over by the new company, and other payment of partners capital and settlement respectively. So the first journal entry as per the problem is realization account. So we have to transfer all the assets to the realization. So for transferring all the assets to the realization, the entry is realization account debtor. The total amount is 1,82,500, to debtors account 40,000, to stock account 37,000, to plant account 85,000, to investments account 20,500. Second journal entry, for transferring the liabilities, creditors account debtor to realization account, amount is 55,000. The third journal entry is normally for receiving the purchase consideration or purchase consideration due. Purchasing company account debtor 95,800 to realization account. Fourth, for settlement of purchase consideration, cash or bank account debtor 47,900, that is 50% of the purchase consideration. Shares in purchasing company account debtor 47,900 to purchasing company account 95,800. So that is settlement of purchase consideration. And if you refer the problem, you have noted that the investments is not taken over by the firm. The investments has been realized 10%, 5% less. So the value of investment given in the problem is normally 20,500. So if you calculate 95% of the investment, the amount will be 19,475. So for that, the journal entry will be cash or bank account debtor 19,475 to realization account, especially for the sale of or realization of investments. Next, in this problem, it is mentioned the company which has offered shares to the firm, which has been sold by the partners again for 5% less. So in this case, the loss on the sale of shares should be recorded to the realization account. So the journal entry will be cash or bank account debtor, that is 95% of the share worth, 47,900 will get 45,505. Realization account, that is loss on the sale of shares, 2,395, to shares in purchasing company account 47,900. Next, we have to transfer the realization losses or even profits to the partner's capital. So in this problem, we have a realization loss which will be transferred to the partner's capital in their profit sharing ratio. X capital account debtor 8,772, Y's capital account debtor 8,000, 5,848, to realization account 14,620. So realization loss has been transferred. In the next stage, we will transfer the reserve fund or even profit and loss which is available in the balance sheet. Here we have a reserve fund of 7,000 which is transferred in their profit sharing ratio. The entry is reserve fund account debtor 7,000 to X capital account 4,200 to Y's capital account 2,800. Finally, the settlement of partners capital final balance. For final balance, we have to prepare the capital account. Then only we can know the amount which is payable to the partners. But as per the journal entry, the entry will be X capital account debtor 70,428, Y's capital account 46,952, to cash or bank account 1,17,380. So thereby we can end the journal entries. Next stage, we have ledger accounts of the partners. As we know, we have to prepare realization account, purchasing company's account, shares in purchasing company account, partners capital account, and cash or bank account. So first we can prepare realization account. So to transfer all the assets on the debit side, to debtors account 40,000, to stock account 37,000, to plant account 85,000, to investments account 20,500. For transferring the liabilities by creditors account 55,000. For receiving purchase consideration by purchasing company account 95,800. Next, for realization of investments by cash or bank account, that is 95% of the value of 20,500, 19,475. Next, we will record on the debit side of the realization account for the loss on the sale of shares, that is 5% of the amount what they received in the purchase consideration, that is 47,900 rupees. So you'll get 2,395. So if you total, realization account has highest balance on the debit side, lowest balance of the credit side. So thereby there is a loss of 14,620, which will be distributed among partner X and Y in their profit sharing ratio, that is 8,772, 5,848 rupees. The second account we have to prepare is purchasing company's account. So purchasing company's account on the debit side to realization account 95,800, and on the credit side for the settlement of purchase consideration by cash or bank account 50% 47,900, by shares account 47,900. Total is 95,800. The third account is shares in purchasing company account. In this problem, the shares are not distributed among the partners, but it is sold by the partners for 5% less, that is 5% discount. So for receiving the shares, the entry is shares in purchasing company account on the debit side to purchasing company account 47,900. On the credit side for sale of shares, the amount is 95% of 47,900 by cash or bank account, that is 45,505. By realization account, that is loss on the sale of share 2,395. Total amount is 47,900. The fourth account what we have to prepare is partners capital account. In the partners capital account, by balance brought down 75,000 and 50,000. By reserve fund, transfer of reserves 4,200 and 2,800 in their profit sharing ratio. On the debit side, for realization loss to realization account 8,772, 5,848 rupees. And final settlement of cash to cash or bank account 70,428, 46,952. In the last stage, we will prepare the bank or cash account. So in the bank or cash account, there is a balance of 4,500. So to balance brought down 4,500. To purchasing company's account for receiving cash 50% of purchase consideration 47,900. To realization account for the sale of investments, cash received 95% of the value of investment 19,475. To shares in purchasing company where the shares are sold for 95% value 45,505. On the credit side, for payment of X capital 70,428, for payment of Y's capital 46,952. Total of the cash or bank account is 1,17,380. So in this problem we have taken into consideration both journal entries and ledger accounts. Students may expect any one aspect in the final examination, and as for your question paper pattern, we noticed in most of the years they had asked only ledger accounts and not journal entries. So thereby you can concentrate more on journal entries to a smaller extent, and for ledger accounts to a greater extent. Thank you for watching the video. Thank you.